Hi, everyone. Today we are going to be starting with Chapter 9, and Chapter 9 is going to introduce special journals. So today's lesson, 9.1, is specifically on what's called subsidiary ledgers and controlling accounts. So by the end of this lesson, you will be able to distinguish among service, retail merchandising, and wholesale merchandising businesses, identify the differences between a sole proprietorship and a corporation, and explain the relationship between a subsidiary ledger and a controlling account. So, the first thing that we are going to talk about is what type of business we were doing accounting for in chapters 1 through 8. So, in chapters 1 through 8, we completed the accounting cycle. However, the accounting cycle was specifically for a service business organized as a proprietorship. So, a business that sold services and was run by one person. Now, what we are going to do is transition into the accounting for a merchandising business organized as a proprietorship. So, organized as a corporation. So, merchandise is goods that a business purchases to sell, and a merchandising business is a business that purchases and resells goods. And so we are going to now be doing the accounting for a company that is going to sell these goods. Now, there are two different types of merchandising businesses: a retail merchandising business, which is a business that sells to those who use or consume the goods. Then a wholesale merchandising business who buys and resells merchandise primarily to other merchandising businesses. Now, service and merchandising businesses use many of the same accounts. However, merchandising businesses have additional accounts for the purchase and sale of merchandise, which we haven't talked about up until this point. So, we're going to learn how to incorporate them into our accounting. Now, many businesses that need larger amounts of capital choose to organize as a corporation. So, before our business was a sole proprietorship owned by one person, but a corporation is an organization with the legal rights of a person, which many persons or other corporations may own. A corporation can own property, incur liabilities, and enter into contracts in its own name, and a corporation exists independent of its owners. So, a couple of terms that go along with corporation. The first is capital, the assets or other financial resources available to a business. We have share of stock, which is each unit of ownership in a corporation. So, if you want to be part owner of a corporation, you can purchase stock in in that corporation. A stockholder is the owner of one or more shares of stock, and capital stock is the total shares of ownership in a corporation. When you form a corporation, you are going to utilize the Articles of Incorporation, and that's a legal document that identifies the basic characteristics of the corporation and is part of the application submitted to the state to become a corporation. Then, a state approves the formation of a corporation by issuing a charter, which is the legal right for a business to conduct operations as a corporation. Now, some of these bigger corporations are going to have a lot more accounts than a smaller service business. And so we need to change our accounting slightly. So we should already know what vendors are. And a vendor is a business from which merchandise, supplies, or other assets are purchased. So before we were typically using accounts payable dash the name as the vendor as the name of our account. However, with bigger businesses, let's just use Walmart as an example, they're going to have tons of vendors. So we're not going to list accounts payable dash the name of the vendor as an account name for every single account in the chart of accounts. And so what we're going to do instead is create a subsidiary ledger. So before we just had the general ledger, now we're going to start incorporating some subsidiary ledgers, and that's a ledger that is summarized in a single general ledger account. So accountants often refer to this subsidiary ledger as a subledger. Today, we are in this chapter, I should say, we are going to be focusing on the accounts payable ledger, and that's the subsidiary ledger containing vendor accounts. The controlling account would be accounts payable. So, a controlling account is an account in the general ledger that summarizes all the accounts in the subsidiary ledger. So, from this point forward, we're going to be utilizing the accounts payable ledger. This is a little graphic that explains it. So we have a page for each one of our individual vendors that is going to be summarized in our accounts payable ledger here. The total from the accounts payable ledger is going to go in accounts payable, which would be in the general ledger. So we have a separate ledger that has all the information for accounts payable, and just the total of accounts payable will go in the general ledger. Now, when we are setting up a subsidiary ledger form, what we are going to do is put the date, the account name up here at the top. So it's just going to be the vendor name, the word balance, a check mark, and then the account number, and then the account balance. So the account number is going to typically be smaller than the other accounts payable accounts. It's slightly this ledger form is slightly different from accounts payable, the accounts payable ledger form, in that this part here that's circled is all the same, but now for the balance, there's only going to be a credit balance because we're not going to be utilizing the debit column, because all accounts payables have a credit balance. What we're going to do now is move on to the work together.